Hello monsters, this is Fahad. It's been a couple days since I made the video, so I'm excited to be back again. And so today let's take a look at Mercadolibre. I think that's how you say it, Mercadolibre. Symbol is MELI. I just issued an alert sent you guys by email to buy Melly June 130 145 call spread. So I see some volume is already starting to pick up over here. So this is the stock, the daily chart. What I'm going to do is, first of all, I'm going to get rid of these moving averages because they just simply try to clutter my screen and stop me from actually taking a look at it from a more important angle. But here is the daily chart. Now, purely from a technical standpoint first, what I'm looking for is, see how this breakout right here that happened from 120 towards 130 level? That breakout happened on relatively high volume, about 1.2 to 1.3 times daily average volume. Pretty good, solid, high volume breakout. Part of the reason why that happened was that on this very day, April 13, Gene Munster came out of Piper Jaffray, who very closely followed the internet sector and came out with a very bullish view on the stock. I'll dive into some of those comments later on. But anyway, so this breakout back in April was driven by bullish comments from Gene Munster. So that high volume took the stock above the high point that we saw back in November of last year before things went south. And then it has now since pulled back slightly and is consolidating towards in this range. I can draw a trend line basically connecting the dots showing that it's in a steady trend higher from here. This is once again a low volume pullback, and what I'm looking for is this. I'm looking for this to break out from here, right from here, and see these volume over price resistances right here and make a run all the way towards 142.20. I mean, let's just take a round figure because these are high, expensive, high dollar stocks. So let's just call it 142 round figure. I'm looking for a breakout from 130 and then breakout all the way to 142. Now that's a pretty good size rally from here. We're talking 12 to 13% upside. So I have a feeling that's not going to happen without any significant news. And what news could that possibly be? And I think that's going to be earnings. All right. So, and if their earnings are really, really good, I expect that this congestion area that's going to come into play between 142 and 147 is not going to be anything significant. Maybe a moderate pause for a short time and maybe a bull flag consolidation in this area, and then another breakout and possible run all the way to new 52-week high, which would be 155 plus. All right. Now, in the option market, that's the second phase of how we review option. In the option market, if you scroll down to the entire option chain, all right, if you scroll down to the entire option chain, you will see that there is 2,500. The open interest more than any other strike in the entire option chain is this 2,500 open interest that is sitting in May 130 calls. 2,000 contracts of that was bought on, according to my notes, it was bought on March 30th. And they paid $3.40 offer side for that. The bid and ask at the time when they bought these on March 30th, 2,000 contracts, was $285 times 350. They paid $340, so near the offer. That's approximately, what is it, $680,000 bullish bet. That is still is situated let me just do my math correctly. 2,000 times 100 times 3.4. Yeah, that's $680,000 of bullish bet that is still sitting right here in May 130 calls. Then they came back a few weeks later in the middle of April after Gene Munster came out with the bullish article and bought a few more, 500 more of these contracts and paid up to $5 and now still remains in the open interest. And today they're back and they bought another 230 contracts today and they paid up to $5.40 offer side for these. So I expect the open interest to climb higher once again tomorrow. So pretty good, decent size, about $700,000-$800,000 worth of calls have been bought at this strike May 130th. Then you can go further out all the way here and you'll see way long-term January 17, 130 strike calls. I mean, if I just go here, and pull the chart of this, I can show you that right here, this happened way back in October last year, so I can pull the history behind it. It will take me a little bit time, but I bet you those were bought as well way back then. This is the chart of actual the option activity itself. Anyways, so the bulls are positioned for a breakout through May 130 with earnings coming up on May 5th. So when is the earnings? Right here. This is the earnings, May 5th. Okay, so that's a technical view, and that's the that's a technical view, and that's the option activity. Now on the fundamental side, digging around, I find something very interesting that gets me pretty interesting about this stock going forward. So first, let's take a look at what happened in last earnings report. I quickly put this note together earlier today. So back on February 25th, when the company announced earnings, it blew estimates out of water big time. The Q4 was 88 cents versus 69 cents estimate, big beat. Revenues 180 million versus 171 million, big beat. Total number of items that were sold on the website grew 22% year over year versus 20% in the prior quarter, so it accelerated. Total payment volume grew 24.7% year over year, and this is the most important point. Management guided take rate target of rising from 9% to 13% over time. So what does that all mean? How is the quarter shaping up so far? So let me just show you what's happening. Okay, so this is what gets my interest. Digging around, I find out that there was a actually this is Credit Suisse. I'm gonna show you something from Bank of America right here. Okay, this is a note from March 29th. All right, remember Piper Jaffray turned bullish on this on 15 days after this. So first, Bank of America presented a bullish note talking about new tax rules changes on March 29, and then Gene Mustard came out on April 14, and then Credit Suisse came out after that. Now I'm going to cut through a lot of the details here, but this is the big point right here, and this is what you need to take with you. In Latin America, if you're in Argentina or you're in Brazil or most of the other countries, there is a tax that you pay. It's called insertion fee. All right, it's called insertion fee. So let's say if any time you make an online listing on any website and you want to sell it, right, just to have your product listed, whatever you're trying to sell, whether it's services or goods, just to have your product listed on the website to sell locally, you have to pay the government what they called an insertion fee. Now there are different percentage points of what that insertion fee should be based on the size of how much the product is listed for, and so on and so on. But so that has always prohibited Latin America from catching up with the rest of the world from getting over the board and really increasing the online transactions in the past. I mean, in terms of the total retail sales, less than 2% of all shopping is done online in Latin America. Because of all these different tax regulations that are in place, one of them, biggest one, was insertion fees. But guess what? Back in February, and this is what Bank of America is excited about, back in February of this year, so 2 months ago, the Supreme Court injunction basically got rid of that insertion fee. I'm not going to go into the detail. This is a very long note and it talks about it in a lot of it. But in February, the Supreme Court knocked down that insertion fee completely. So right here it talks about it. You know, subtle enhancements like the elimination of insertion fee resulting in deeper, widening offerings, and perceive as serious initiatives capable of further improving fulfillment, logistics, financing, various elements, blah, blah, blah. But the most important thing is right here. These insertion fees were eliminated. So what has that done? That has basically sharply increased the listing of things that people want to sell online, which means the actual growth itself is now taking a robust leg higher, a new leg higher in Latin America. And Mercadolibre is right in front and center of that with its large market share both in Argentina as well as Brazil. So just to give you some perspective on this, I'm going to go straight to one of the charts that I saw in this report right here. So, right here. See this middle chart right here? All right. So here are 3 different companies compared: Mercadolibre, Nova, and B2W. These are all online platforms. This is what we saw when that insertion fee was removed in the first quarter. you have these visitors, all visitors, the spent time, visitors or average minutes per visit, average minute per visit. After basically stabilizing around what 7 minutes per visit from the, it increased sharply. It just ripped higher starting in early 2016 as soon as the Supreme Court knocked down the insertion fees. Why? Because the number of listings online that people want to sell just went up sharply. Similarly, you saw an uptick at the same time of unique visitors in millions in Brazil. You saw that tick higher. All right, in basically 2 of the 3 platforms. The top one here, the blue one, is Mercadolibre. And then you saw the average minute per visit sharply increase higher. And then you saw the frequency, the average monthly visits per user, also sharply tick higher. So all the trends that basically make up about, that tells us the health of the e-commerce segment in Brazil and Argentina, basically talk about the entire Latin America. All of those ticked higher, and that's bullish. I read that as extremely bullish for pure plays in e-commerce, pure plays based in Latin America, and Mercadolibre is right in the center, front and center of all of that. I think this means multiple expansion. First of all, the earnings multiple should expand from here based on this information alone. And on top of that, you should see earnings accelerate along with it, which makes the case that the forward earnings estimates are potentially very low. I mean, think about this. The insertion fee was removed. Imagine if all the listings are on eBay in America and all the listings are on Amazon and whatnot, just to list your items in those websites to sell something, if you had to pay the government a tax just to list your items, I mean, and then the tax was suddenly removed, you would naturally see a significant increase in e-commerce, and that's what we are seeing over here. Interestingly, while Mercadolibre saw significant improvement in these e-commerce trends, the U.S. counterparts, right here is a chart, the U.S. counterparts saw a decline. They're not benefiting from it, so maybe there were other things. So you saw Alibaba presence, unique visitors and millions of dollars in Brazil, crashed big time. You saw Amazon sites came down. You saw eBay, which is a horrible performer anyway, continues to crash down. So while everyone declined, the local ones went up. And here's another look, because of the same thing. You saw, by the way, do you know that Brazil has more mobiles than people in the country? Anyways, the mobile e-commerce as a percentage of total online transaction shot up sharply for the same reasons too. So you have penetration that is still in very early phases, and you have tax regulations coming down, being relaxed, and I think all that translates into higher multiple and higher earnings power, and that's exactly what you saw in that last earnings report. The last thing I want to show is this report from Credit Suisse. This one basically goes to talk about one of the most important things, which is right here. See, this chart seems very confusing, but it's called consolidated take rate. This is what the company actually takes in terms of its percentage when somebody sells online through their website. And this take rate has been steady most of the time for several years now, about 2 to 3 years now, about 9% to 9.5%. In the last earnings call, when we had in February, when the company sharply beat on top and bottom line and raised guidance, management commented they see this take rate going up steadily from 9% all the way to 13% in coming years. It's going to be slow and steady rise, but it's going to increase all the way to 13%. Why? Going back to the same thing. Relaxed tax regulation with the insertion fee removed, because what's happening is that people that wanted to basically list a bunch of items individually first and wanted to only list certain items, now they can list the entire basket. And so when you list the entire basket instead of just one item at a time, the take rate that the company has, the margins on that basically improves, and as the margin improves, that means the bottom line improves. So even if the top line revenue growth stays, let's say the same, around 22% growth year over year, the margins will expand dramatically with the take rate going higher. It's a key message. It's a very difficult message to send across to everybody, Credit Suisse talked about this, that the ASP combinations and all this stuff basically means that the margins are going to improve. And, so you're going to see this take rate go higher towards 13%, and that means the margins are going to improve. And that means that if the top line revenue is growing at maybe 22% a year, you're going to see the bottom line EPS may grow at 30 to 35% or even faster than that going forward. And all that translates into higher stock price in the future. To quickly show you, by the way, this is their website. And then the last thing I want to show you, if I go here, so here's the earnings. So after discussing all this, and this is the chart I like to come back to just to kind of show you. So simple case over here. So you have insertion fee removed, you have a massive, you have a huge beat on top and bottom line growth, and you have the listings going up, the unique visitors going up, you have the average minutes that per user spends going up, everything re-accelerating, market share going up, everything is going up, and yet here is the consensus view. It's sitting in the dumpster. I mean, 2017 EPS basically has been cut all the way from, let's say, from mid part of last year from $4.53 to $3.38. Your fiscal year 2016 EPS cut from 357 to 279. And, so basically the consensus has not adjusted. Nobody has moved the numbers, and that tells me there's a disconnect in the story. I see both of these lines, these orange and green lines, start to tick higher from here and gradually climb back towards $4, $4.50 earnings power in the next 12 months or 18 months, and that means multiple expansion, and that means stock is going higher. So that is my bullish view, fundamental bullish view. Technicals, I'm looking for a move up to 142 all the way up here, and option activity wise, the bulls that have been accumulating position right here in May 130 calls, over 2,500 contracts already accumulated since March 30. Look for a breakout and look for a target of 142 on very good earnings. Maybe it will consolidate right here for a little bit, and then look for another breakout all the way to new 52-week high, which is 155 plus. That's it.